I think right now, what we're seeing is insiders are still extremely cautious. We're seeing almost no insider buying. Last week, insiders bought about $20 million worth of stock, which is nothing. Near, major lows, you can see hundreds of millions of dollars bought in a single week. We're not anywhere close to that. So that's one thing that I'm paying close attention to. Another is what Stan Druckenmiller has called the inside of the stock market. He's called this the best economic predictor he's ever seen.
Mhm.
That's the relative performance of economically sensitive sectors. What are the home builders doing? What are the retailers doing? What are those at major lows? Those are the groups that lead to the upside. Those stocks have been extraordinarily weak over the last couple weeks when the market's been trying to rally. It's not home builders, retailers, and things leading the way. It's these speculative favorites, that are driven by, the call option buying and things that have rallied really strongly over the last couple of weeks. And the relative performance of these economically sensitive groups has been very weak. So that's something that that I'm paying very close attention to also. So at a sustainable low for the stock market, I want to see these groups lead to the upside like we did in 2020. In the summer of 2020, those things were ripping to the upside, and that's kind of the opposite of what we see today.
Okay. So a few minutes ago, you used the term washout. So it sounds like you, again, probabilistically would expect to see enough malaise in the stock market where we get to a point where there is a washout, people begin to capitulate, and what you would then hope to see as, sort of early signs of life is the insiders starting to buy again. So you would expect them to go down into sort of the single digits on the inside buying ratio. Once they pop out of that, that would be an early kind of potential game on indicator for you. You'd then want to see concurrently some of these leading sectors really starting to outperform. So obviously you're saying we're not there yet. It sounds like if I heard you right, you would expect not to see that for a couple of months as we kind of, grind down in the malaise of a regular bear market. That's the washout period. So if that's the case, and you've been nodding as I'm saying this, so I think I got it right. Jesse, I'm obviously going to invite you back on again in the future on a regular cadence, but please, if you start to see this stuff happen, please reach out. We'll bring you on for a special interview so that we can let folks know, hey, we're beginning to see some of these early signs.
Absolutely. Yeah. And I would just point out at a major bear market low, you do not see insiders being extremely cautious and lack of buying, and at the same time, record inflow into leveraged long ETFs like we see today.
Yeah.
Retail investors have never been more bullish than they are right now. I mean, the record flows into leveraged long ETFs tells you that there's still buy the dip bid out there that is very, very strong. And that's not something that you see at major lows. I would just point out too that insider sell to buy ratio, the 13-week ratio, did dip down into bullish territory back in like April of 2022. But it took that ratio staying that low for another 6 months before you got a good signal on the longer term 12-month ratio. So we haven't even gotten that early signal, insiders starting to get bullish yet. So that would be the first thing I'd want to see. But that would also suggest that you need to see a good 6 months of that kind of insider bullishness before you can have confidence in the idea that 18 months, 2 years from now, the economy is going to look a lot better. Earnings are going to look a lot better than they do right now. And we haven't even gotten that early sign yet from insiders.
Okay. Well, if you don't mind, Jesse, let's trundle over now into the okay, so what part of this, which is, all right, I'm a investor, I'm watching this. Jesse's outlook makes a lot of sense to me. Seems like I got to get kind of defensive, at least for, the next couple of months, at least, maybe longer.